Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. Today's November 20th. It's Friday. We made it through the week. What a week it was. I mean, what a week, right? We had another 740,000 jobless claims yesterday or so. That's people that lose their jobs. The stock market's been all over the place, up, down, up, down. It's actually kind of flat today again. But what moves the stock market is what's fascinating. Any word of stimulus, any word of a vaccine, and the stock market goes crazy, right? I mean, we got Congress and, the Republicans won't talk to the Democrats and the Democrats won't talk to the Republicans. And then we get news that they're going to talk and the stock market goes up. It's wild times we live in. Look, the stock market's close to a record high. Why, our economy's close to a record low. As a matter of fact, I've never seen it quite so bad. I want to talk about a couple of things today. I want to talk about the Federal Reserve and Jerome Powell. Now, this week I was listening to Jerome Powell. Now, I won't get the words exactly right, but someone basically asked Jerome, they asked him, what are you doing to, bridge the gap of inequality between the rich people and the poor? How are you helping out the poor? And here was Jerome Powell. His reply was that we're going to keep interest rates low basically forever. We're just going to keep them around 0% because this really helps out the poor people. Well, he can't really believe this, right? Look if you're a poor person, you have credit card debt. What's your credit card debt? Is it at 0%? No, it's at 18%, maybe 20%. Keeping interest rates low hurts poor people. It hurts the elderly people that are on fixed income. Here's the problem. Can I tell you the problem? Okay, so Jerome Powell says we don't want to have negative interest rates. And right now, I don't know, the 10-year, it's around, less than 1%. Okay, so if you put your money in the bank, it's right around 0%. You're getting nothing on your savings. Absolutely zero. And he doesn't want to go to negative interest rates. I got news for you, Jerome. We're already at negative interest rates. Now, there's a difference. There's a difference between a nominal interest rate and a real interest rate. Okay, nominal interest rate right now is below 1%. It's the government's own interest rate, okay? It's about 0.08%. All right. Anyways, so that, in other words, the 10-year bond is trading at 0.8%, not even 1%. Okay, so the real interest rate on that bond, the real interest rate is negative. Now, why is it negative? Because real interest rates take the nominal rate and then they subtract the rate of inflation. Now, the government, our own government, will tell you they want to run inflation above 2%. So let's just take 2%. So if you got less than 1% and you subtract 2%, you're into a negative interest rate already. Okay, now here's the thing. We're not going to take the nominal rate negative, but you know what? We're going to take the real rate of interest. We're going to take it negative by probably 5, maybe 10%. Do you know why? Because they're going to print so much money that the inflation rate is going to get way above 2%. It's going to go 3, 4, 5, 6%. All right, so you take that 1% that they're giving you on the 10-year and you subtract 6% from it in inflation and you got a negative 5% real interest rate. Now, what does this mean? It means you got to protect yourself, for God's sakes. You got to protect yourself. You can't just go throwing your money in the bank account because you're getting 0%, but you're really losing money year after year after year. Your purchasing power is going down. Now, how do we protect ourselves? We protect ourselves by buying gold. Now, people laugh at me about gold. They think that I've missed the boat here. They think that gold is a loser play. It's an old guy's play, right? It's going, drifting sideways. It's not going anywhere. It's kind of drifting sideways, maybe even going down a little bit. Well, I got news for you. You know, gold is at basically a record high now. On the GLD, I know gold's trading around 1900, let's call it. But you cannot go to the store. I go to a coin shop. You cannot get physical gold for less than $2,000. They go, yeah, Mike, but gold is out of date. Look at Bitcoin. Look at Bitcoin, Mike. Bitcoin is where you want to be. And there's nothing wrong with Bitcoin. Bitcoin's great. Get out of the system any way you can. And young people, they love Bitcoin. But I got a little bit of news for you. Bitcoin is kind of like gambling. Now, right now, you're winning. It's at 18,500. And as I stated yesterday, I think it's going towards 30,000. Maybe it only gets to 26,000, but it's going up. It's going up. But here's the thing with Bitcoin. Bitcoin can lose 50% of its value in one day. One day. You can wake up tomorrow and Bitcoin could be under 10,000 again. You could wake up the next day, it could be under 5,000. You'd also wake up tomorrow, it could be over 30,000. Look at Bitcoin is gambling, and right now we're winning at the table. We're winning on Bitcoin. And that's good. You're out of the system. Nothing wrong with Bitcoin. But have I missed the trade on gold? Really? People say that to me. Mike, you're missing the trade. You're stuck in gold. No. I'm protecting myself from lower interest rates, from negative interest rates, from negative real interest rates. That's what I'm protecting myself. And it's not gambling. It's protecting myself. Now, am I really missing the trade on gold? You know where I started buying gold at? About $300 an ounce. $300 an ounce. That's right. It's early 2000, 2004, somewhere around there, it was trading right around $300 an ounce. And from that time, which is, it's 15 years ago or so. All right, but it's gone from $300 and now it's at $2,000. You cannot buy physical gold below $2,000. If you can find it below $2,000 for gold eagles, for American buffalo coins, buy the physical gold if you can get it below 2,000. You cannot find it there. But if you can, that's a really good deal. And then you buy it. You jump on that to protect yourself from what's coming. And what's coming is the printing of money. The printing of money. More. They're going to print next year, 2021. Now, 2021 is going to be, I'm afraid it might even make 2020 look good. And that scares me. That's scary stuff, right? But they're going to put $6 trillion into the marketplace to keep the stock market elevated. It's going to deflate your dollars, your negative interest rates on your money is going to reach probably 4, 5, 6% next year. Negative real interest rates. Yeah, we're going to keep the nominal rate between 0 and 1%. That's true. But the inflation rate, when we put another $6 trillion into this economy with stimulus checks, oh my goodness, with bonuses for unemployment, oh my goodness, with bailouts to every major zombie corporation out there, these businesses should not even be in business, the ones that are getting these bailouts. If you need bailouts and you're a business, I don't think you should be in business. Let's take your assets, give them to someone that can manage your assets better, and let them run the business. I understand the close down. I get that. And I feel sorry for the small businesses, but these big businesses that they took billions and billions of dollars to buy their stock back so it would go up, and now they have no money and they want us, the taxpayer, to come and bail them out. This is just wrong. It's just wrong. These $3 trillion in business bailouts, really? Anyways, that's my rant for today, but gold, I am not missing the play. Gold is getting ready to shine. It is going to shine. It is a bigger bargain right now, right here, $2,000 an ounce than it was at $300 an ounce when I was buying. Why? Because we printed so much more money. Gold has one place to go, and that's up. It's going to shine. Interest rates are going negative on the real interest rate basis, not nominal rates. Nominal rates, we're going to keep them pegged right around 0 because Jerome Powell says this helps out poor people. He's crazy. You're crazy, Jerome. You're crazy. Okay, I'm done ranting for today. So what am I doing today? What am I looking at today? I'm just going to give you one. Anyways, I put a call option on today, a couple of them. Anyways, Rocket Mortgage, RKT, Rocket Mortgage. People with this low interest rate pegged around zero, people are getting home. They're refinancing their mortgages. They're refinancing them down at below 2% now. You can go in and get a refinance on your mortgage. If your rate's above 2%, go on in. They'll give you 2% money. Isn't that crazy? It's crazy. Anyways, I'm not saying that. That's probably a good thing to do. But Rocket Mortgage, when they originate each of these loans, they're going to make money. They're going to make money. Now, Rocket Mortgage, RKT, again, RKT, Rocket Mortgage, it hasn't even been traded publicly very long. The public IPO price was $18. I think it closed that day at $21. So it shot up right on the IPO, and it went all the way up to $34. But it's come back down. It's come back down. It's below $21 right now. It's below $21. I bought some call options out to January. We'll see. We'll see what happens. That's all I'm looking at today. You know, it's hard to find things to buy when the market is so overpriced. Now, do I think the market's going to come in? I think it should. I don't know if it will, but I do think it should pull back here. What we got here is a Friday. We got Friday. We got the weekend ahead. Everybody get ready for the weekend because it's here. Get out there, have some fun. Next week, Thanksgiving, short week. We only got what, it's 3 trading days, and then we got Thanksgiving. We'll see what we do next week in the markets. Today we're down a little bit. That's really all I got for you today. Have a great weekend. We'll talk again on Monday. Hey, if you like this, give me a like. Give me a like. You know, I think I got up to 5, maybe even 6 likes the other day. 6 people liked it. Hey, give me a like. My goal's 10. Maybe I can reach 10 likes today. I'm just messing around with you. But hit that like button. Hit the subscribe button so we can talk again on Monday. I'm Tall Mike.